Hello, everyone. Hope you're doing well. Welcome to your pre scene analysis for the November 2020 and February 2021 case study exam. So, this operational case study exam pre scene analysis company given to us is called Amazing Beds. So, as you would have figured out, or as you would have already gone through my industry analysis in the previous page, you will already have an understanding of what the company is, what the industry is, what the real world industry is like, what are the opportunities, what is the growth rate. So, keeping all of that in mind, I now welcome you to the pre scene analysis where we are going to go through word by word of the pre scene released by CIMA so that we don't miss anything, we don't miss any hints, we don't miss any clues, and making sure that we give you detailed explanations of where you can study or where each part from your E1, P1, and F1 syllabus is coming from. So we will make highlights, we will make underlines, we will make arrows and show you which part of your syllabus you're supposed to focus on throughout this pre-scene. So the important topics will also be brought about to you. Same way, we will be discussing a whole set of important topics, or let's say, actually writing a whole set of very important topics from the case study perspective once we start with our exam styled mock questions. So, we do 25 exam styled mock questions, which is close to 9 full mock exams, which are exactly timed and presented to you like the exam. You will be doing a lot of practice with us with a lot of important topics from the case study perspective coming up, but we will only be able to start that after you have a good and detailed knowledge about the pre-scene company given to us. So that is what the pre-scene analysis aims at doing, giving you a detailed understanding of what your company is so that you are more comfortable to introduction and then writing the mock answers at a later stage. So in short, everything that we run you through in the industry analysis, in the pre-scene analysis, and then will be used in your mock exams. So everything comes from us. You don't have to worry about it. See how we explain it to you in a simple, easy way. All you have to do is follow. So let's go. So we first speak about your role. What are you expected to do as part of the operational case study exam? Now, you might have already seen my introduction to the operational case study exam. You might have already seen a video where I am explaining to you how to study for the operational case study exam from the CIMA exam blueprints. So after you have seen that, when we start speaking about the role of a finance officer, it's clear that your job will be to focus on the short term, on the day to day decisions of the organization. So you are a finance officer working within the finance department of Amazing Beds. You are principally involved in preparation of management accounting information and providing information to managers to assist with decision making. So management accounting, which encompasses costing, variances, budgeting, and then decision making, all four are part of your P1 syllabus. So in my previous videos as well, I have been very clear to show you and tell you the importance of P1. P1 is a major backbone of this operational case study exam, which you will figure out once we go into the pre-scene deeper as well. Now, at times, you are also expected to assist with preparation of financial statements and answer queries regarding financial reporting and other financial matters. So, clearly, everything relating to financial statements, financial reporting forms part of your F1 syllabus. So, throughout this pre seed analysis, we are going to point out to you where these topics are coming from. So, if there is a topic which is gaining relevance, we will clearly point it out telling you that this is from your P1, this is from your E1, so that at least those topics you have understood, you have kept in your mind, you have good knowledge about. Moving on to the introduction. Now, Amazing Beds is based in Eastland, a country in Europe with the e-dollars as its currency. So, as I mentioned, they have given you a fictional company. Name of the company is Amazing Beds. They have given you a fictional country. Name of the country is Eastland. It's based in Europe. And the currency is e-dollars. Now, very clearly pointing something out to you, it says Eastland is in Europe. This means that Amazing Beds is located in a developed economy. Europe is developed, right? And so it opens up advantages such as better infrastructure, highly skilled workforce, and customers have the spending power, which is important. So it's a good comparative advantage for you already that you are based in a developed country which is situated in Europe. Whereas we also need to take into consideration the higher regulation, higher factors of production costs. But this clearly tells me that the demand conditions, meaning the people in that country, are going to be sophisticated. They are going to demand good products. So the demand conditions are going to be strong, which is a very good sign for any company, because if demand is strong, demand is sophisticated, you will be innovative, you will have a good customer base. So remember, this is your competitive advantage. From this we learn Eastland is a highly developed economy, which means people have the interest and money to spend on such services. Also, government will have infrastructure in place to promote such markets. So again, the government will be promoting healthcare. The government will be promoting, good infrastructure for healthcare, which is a boost for any mattress and divan bed industry, which we've already learned in our industry analysis. So see how the industry analysis is useful when we start with the pre-scene. So remember this. You can use this when you start an answer, end an answer, saying that it's already to our competitive advantage that we are situated in a developed company because our customers will be sophisticated. So further research, further development, further providing them with innovative goods can be a good sign, can be a good, outlook for my company. Keep this in mind. Moving on to further details, the company sells mattresses and beds through its network of 120 stores, which are located throughout Eastland and through its own website. So you have two major ways you cater to the customer. One is your own stores, 120 stores, which is a big number, and you have your own website for online sales. Now we have our own stores and sell through our online website. This is a vertically integrated business where we are in direct contact with our customers. This can have its upsides. For example, let's say you are just making the goods and then giving it to a retailer to sell them. So you don't really get one on one feedback, you don't really get one on one support of the customer, right? But now, because you have your own store, you have all that data which you can keep, all the data which you can further, use for your own competitive advantage. Whereas on the other hand, having your own stores is a huge capital investment, so money will be required. There is less flexibility. You cannot always keep shifting stores, right? It's not possible at all. So it's a huge investment. There is a risk, but it has its upsides as well. So keep this in mind. It is the country's largest bed and mattress retailer. This is your comparative advantage. You are the best. Based on revenue, you are selling the most beds and mattresses. So, yes, it's a huge advantage. You can keep this in mind. Start an answer by saying, we are one of the largest bed and mattress retailers, which can be, comparative advantage for my company as I'm the market leader. Amazing Beds sells all of the major brands of mattresses and beds, as well as its own brand, which the company manufactures at its manufacturing facility in Eastland. So, again, your sales are divided into two. One part is where you're selling major brands, mattresses, and beds, and the other is where you're selling your own brand mattresses and beds. The company does not currently sell mattresses or beds outside of Eastland. So you don't sell outside of Eastland. So, like I said, the expansion opportunity with the smart beds in North America or the expansion opportunity in Asia Pacific regions, because it has a very high growth rate, like we spoke about in the industry analysis, can be considered as a move for my company over here. See how I'm bringing it in? Next, the company was founded in 1978 by George Norton. He started the business with a single store selling a wide range of furniture. So the company was founded in 1978. So roughly, the company has been in business for about 42 years. Can you think of any business which survives for 42 years and is not serving the customers well? No, if you survived for a longer time means the customer likes your product. The customer has, advertised your product. So business can only and only survive for so long because you have a loyal set of customers, a growing brand image, all of which amounts to increasing goodwill. So goodwill is an important comparative advantage in the market which your business will have garnered. Next, soon realizing that customers were constantly asking for advice about mattresses and beds, by 1982 the company was focusing entirely on these products. So you started by selling a wide range of furnitures, but in 1982 you fixed your market segment. You fixed your segment where you are going to do very well. You fixed your niche, which was going to be beds and mattresses. In 1990, Amazing Beds opened a production facility where it could manufacture its own brand of mattresses and divan beds. So in 1990, you didn't just sell, you start producing as well. So again, this is also vertical integration because you became your own supplier. Earlier, you just used to buy, 100% used to buy. Now you buy 50%, but the other 50%, just giving you a simple example, other 50%, you make your own beds, own mattresses, and sell them. That is also called vertical integration. So you are a vertically integrated company. I have used this term twice. So, what does vertically integrated mean? Vertical integration is an arrangement in which the supply chain of the company is owned by that company. Like in our case, you make your own mattresses and divan beds, which is then used by my company to serve the customer. So you then sell it, you then procure it and sell it, which is again sold through your own shops, your own website. So the whole entire process is controlled by your company. So as you can see, everything is handled by my company. This is vertical integration. The benefits are that you can secure the critical supplies at your own time because everything is handled by you. Sometimes it leads to lower costs and better quality because again you control everything. So better control. And it removes suppliers' information from competitors. So you can keep all your production methods, supply methods in the business because you don't have to share it with anybody. You are your own supplier. Same way, there are disadvantages which we need to. So you have, less flexibility. You can't really change anything because you have invested money over there. Sometimes there can be legal repercussions as well. The government will not allow a monopoly. Also, instead of reducing costs, sometimes you will get, by just making sure that you make everything work, you make vertical integration work, you will invest so much money that there is not going to be any tangible benefit from it. So the costs can sometimes spiral, go out of your hand, and then you have no flexibility to change because you've already committed the money. So keep these ideas in mind, keep this stuff in your mind so that you can use it as an opportunity to explain your point better when you start writing mocks. So at this time, there were 40 stores, and by the year 2000, there were 100 stores nationwide. So, again, over here, I'm going to point out to you the importance of financing, the importance of money, because if you are expanding, if you are opening new stores, it takes money, it needs finance, so you need to take into account capital expenditure, working capital expenditure, because if you invest everybody and you don't have the working capital for the day to day running of the business, it can be a problem. So working capital is straight out of your F1 syllabus, just keep it in mind. In 2005, George Norton sold the business to a private equity company and retired from the business. So in 2005, he sold it to a private equity company who still holds 100% of the company's share capital. So 100% is owned by one company right now, private equity investor right now. So you might be thinking, what does private equity mean? How does private equity work? So private equity fund invests in companies and looks to sell its stake about 5 years, 10 years, or sometimes 15 years for a later at a later stage for a substantial profit. So this is for extra reading. I have put it here so that you understand what a private equity investor is like and what they, actually are looking for in a business. So they invest money and after some years they sell it for a huge profit. Often they invest in mature firms, like in our case, that have been trading for a long time, but a firm that needs access to funds to fuel its growth. Like you can see over here for us, we needed so much money to keep opening stores to become the market leader. So at some stage, the money was going to run out for George Norton, who was the sole investor at that stage. So the money was required, finance was required, and that is why George might have thought that it's the best for the company to sell it to a private equity investor because they have so much money on their hands. According to Bain and Company, most private equity deals are between 500 million and 5 billion. So you can see there are big deals which private equity firms can afford. They have a lot of money. This is a major financing option, then more suitable for larger companies. So directly buying. Instead of that, sometimes people look at a private equity investor. Over here, George decided to sell 100% of the business. So the structure of the deal is also different because private equity investors will always ask for a larger stake. As in our case, 100% is owned by the equity investor because they want to control everything. So private equity financing has distinct advantages. What are the advantages? The first is the large amount of funding. You can see that there are huge uh, private equity firms which have deep pockets. For example, in 2010, private equity firm Blackstone invested $450 million dollars in a company, enabling it to reopen and rehire 500 employees. So you can see the scale, it's large. Another advantage is active involvement. So, private equity firms are much more hands on. They will help you reevaluate every aspect of the business to make sure that you maximize value. So, they bring their expertise. Next, incentives. Private equity firms have a lot of skin in the game. As we've seen, they often borrow a lot of money to make their investment and they have to pay that back and generate a return for themselves as well. So, in order for that to happen, they will make sure the business succeeds. So, they have high motivation and then there is high returns. So, this combination of major funding, expertise, and incentives can be very powerful. A study by the BCG found that more than two-thirds of private equity deals resulted in the company's annual profit growing by at least 20%. And nearly half of the deals generated profit growth of 50%. So it's a good outlook for the company. The company will grow because of this private equity investment that has happened. But everything is not good. There are disadvantages as well. First, there will be loss of ownership because George Norton, his expertise, his experience over 42 years is no longer involved. He has sold the business, he's out. Second, there can be loss of management control. So the board of directors that you put in place might not really be able to run or make any decisions without the private equity investors board of directors who will also be part of the board, because they have so much power, they have so much control. So they will want to be actively involved and make all decisions which is suited to them. So it can also mean losing control of the basic elements of business. Then they might have different definitions of value. Now, a private equity firm exists to invest in companies, make them more valuable, and sell them. But a private equity firm's definition of value is very specific and limited. It's only focused on financial value. It only wants to increase the value, the goodwill of the firm, so that when it sells that particular company, they get the highest profit. Business owners have a much broader definition of value. They don't only look at financial, they look at non-financial, such as what you do for the environment, your relation with the customers, with the employees, your reputation. Private equity firms only and only profit oriented. Same way they talk about eligibility, because private equity firms are looking for a particular type of companies to invest in. They have good cash, so that they good readily available money, so they make a major investment. Generally it means that the company has strong growth or strong potential. A business that can't offer a private equity investment firm an exit in less than 5 to 10 years, they will not any which ways go for it. So what they will do is they will enter, they will control, make your business profitable, and then they will look to sell in the near future. So they'll always be working towards an exit. They're not committed to the long term success of the company. So everything has its good, everything has its bad. You need to keep it in mind while you talk about your company. This is an important aspect to keep in mind. Next, there are some common ways in which a private equity firm can exit from its investment. So, what are the common ways a private equity firm can exit? First is repurchase. So, you repurchase, the company repurchases, or the board of directors themselves, which is called a management buyout, repurchase the private equity company's stake and take back control of the business. This is an attractive option, but obviously it's going to be very, very expensive. No real 4 or 5 people at the board level can come up with this kind of money to buy an entire company. Then there can be a secondary sale. One private equity firm sells it to another private equity firm. There is trade sale. The business is sold to a competitor or another company. Let's say there is a competitor which is given in your pre-scene. One way the private equity firm would look to get out its investment or to sell its stake would be to sell it to another company altogether, sell your company to another company altogether. Big issue. And then there is IPO, which is a realistic scenario. The company will look to go public. After going public, after the shares are issued on the public stock exchange, the private equity firm will sell the shares and make a huge profit. Done. So these are 4 common ways a private equity firm will look to exit, and this is what they will work towards the moment they invest in your business. So everything has its good, everything has its bad. Keep this in mind when you are talking about the private equity investment, and understand it deeply before you move on, because this is something which is unique to this case study. So keep this in mind. With that, we move on. Until now, I was only giving you extra information which I clearly pointed out. So I just wanted to give this extra information to you, just to make sure that you don't turn a blind eye to this important aspect which they have mentioned. Now, Amazing Beds, coming back to the pre-scene, sorry. Amazing Beds aim to continue to be number one retailer of mattresses and beds in Eastland. So again, you want to continue, you want to stay at the position of dominance, which is number one retailer. How do they plan to achieve this? Offering a full product range, including all major mattresses, having retail staff that are well trained in both customer service and providing after sales service, help them select the mattress as well, and making its retail stores user friendly. So this, I can say, is a major objective of my business. These three have to be the major objectives of my business, which if I achieve, I will be able to continue as the number one retailer. So this has to be at the center of all our strategies. Remember, your company wants to offer a full product range, have excellent staff, and make your stores more user friendly. These three are the major strategies your company is working towards. At its manufacturing facility, Amazing Beds manufactures its own brand of sprung mattresses, hybrid mattresses, and divan beds. It also has a small research and development team that is constantly looking at mattress technology to try and improve the products that we offer. So, we do have a research and development team in place, which means we are looking at future developments, but it's a small team. So, going forward, we will try to figure out the smart bed technology is being used by Amazing Beds, or it's not yet invested in, it's not yet found out. If not, then you will have to look at the activity and the reasonableness of the research and development team, because these are avenues which are growing. So something to keep in mind. But having a research and development team looking forward, being proactive is a good sign. Approximately 30% of the company's revenue and 33% of its gross profit is from the mattresses and beds that it manufactures. So out of your 100%, only 33% of the profit is from what you manufacture and then sell. So this is not a very big number. You need to look at increasing this to boost your profit margins, because obviously now the private equity firm has invested since the last 10-15 years, so they will have the money, and maybe they want to expand into this so that your profits increase and the value of the company goes up. All other mattresses and beds sold in the retail stores are brought from well established mattress and divan bed makers. So you buy them and then you sell them. Revenue for the year 30th June 2020 was 174 million dollars, of which 64% was mattresses, 36% was beds. So mattresses are by far your higher selling product. Gross profit for the year was 80 million, of which 67% related to mattresses, 33% related to beds. So yes, the product that you're selling the most is also generating a good gross profit for you. That's a good sign. But please make sure you take ideas from these numbers and use them in your answers. For example, whenever you're talking about mattresses, you can start by saying that mattresses generate 64% of the revenue for my company. So this is a good place to start with. This is a good product that we must focus on and always keep innovating. So something like that, where you're using the numbers, where you're really understanding the company and integrating that into your answer, gives the examiner a good outlook to when he starts reading the answer, because this is where you have to put yourself in the shoes of a finance officer at Amazing Beds when all of you are working. So when you're working in your office, do you constantly keep thinking, am I bringing my business skills, or am I bringing E1, P1, and F1 into my email that I'm writing to my boss? I don't think so. All of it comes very naturally to you, right? Because you know your company very well. In your mind, it's fit that I work for this company. So everything that I'm going to reply to my boss is going to be specific to my company. Same way, in the exam, that's all that you're supposed to do. Think you are part of Amazing Beds. Always remember you are part of Amazing Beds. So use the numbers, make the pre-scene to your own understanding, and use it in your answers. And that is why we give you these highlights, these underlines, these extra boxes that you can learn from, and then further integrate this in your exam style answer writing at the next stage with us. So moving on, the company employs 1,160 people. So it's a big company. 1,160 people is a group, is a big group. There are 130 people at head office, 575 in retail stores, 285 at the production facility, and 117 logistics. Fine. Now, what I'm seeing over here is 130 people running the entire operation. So my question is, 130 people to manage the most important functions of the organization? The breakup of the head office function is not given here. They've not told you what is part of the head office. Generally, they tell you HR department is this, finance department is this many, IT department is these many, accounting, marketing, sales is this much, but it's not given. So I'm assuming that the head office includes all of these functions, right? Because where else would it fit? So IT, which is an ever growing sector in the digital world, and with website management in line, because we have a website, with further development of your IT strategy, improvements and expansions will be on the card. So if you don't have good number of staff, if the staff is overworked, if there is not a specific IT team, then this is going to be something which is difficult. Similarly, innovative marketing and sales techniques are being promoted all over the world. If staff are under unrealistic pressure, they will not be able to perform and meet the goals that our company aims to achieve. Most importantly, the HR function seems to also be neglected. Now, we want the most and the best employees to work with us. So, if HR is not right, then how will we achieve that aim? HR is one of the most important functions in any organization. People make the companies, and having the right, competent people is imperative. Also, the finance function, which is ever evolving and demanding, needs to be taken into account. If there is unrealistic workloads which are being implemented, it will not be to the long term success of the company. So keep this in mind. 130 at a head office, out of which they are looking at IT, HR, finance, accounting, marketing, sales, everything. It's going to be a difficult job. And finance and IT, part of your E1 syllabus, are ever evolving. They have new possibilities every day. So, for the long term growth of my company, this is something that I must keep in mind. Now we move on to the directors of my company. The directors for any company are obviously very, very important. They are the shapers. They are the major decision making points for any company. So directors, I feel, if they are competent, if they are well experienced, if they have done their job in a correct way, the company is bound to succeed. And director names is something that I always ask my students to remember so that they can use it as part of the answer. For example, let's first start reading about our CEO, so Chief Executive Officer, Ben DeLuca. So, Ben has been CEO since 2005 and has been involved in furniture retail since the start of his professional life as a store manager. He is responsible for overseeing the whole business and is the key point of liaison with the private equity investor. So he talks directly to the private equity investor and then passes on their direction and leads their direction in the company. Ben has an increasing interest in green and ethical issues surrounding matters of production and recycling. So, let's say whenever you're talking about corporate social responsibility, ethics, and environmental friendly production, environmentally friendly recycling, you can use the name of Ben DeLuca, saying that our chief executive officer is committed to this particular project, and that is why it can be good for us to follow the same because he's going to support it. So Ben is well experienced to carry out the job. He previously worked as a store manager, so he knows the day to day of the business and has worked his way up. So he's also bound to have good market slash external knowledge, which could be very beneficial for the business. His interest in green and ethical issues surrounding mattresses production and recycling can be a big boost and a positive sign for our business because in today's modern world, environmentally caring directors, yes, are important. Second, we talk about Meena Patrick. So she's the retail director. Meena has worked for Amazing Beds for over 25 years, starting as an assistant store manager. She is responsible for the operation of all 120 retail stores. Meena is keen to ensure that the customer experience is easy and pleasurable. She is very knowledgeable about sleep science and wellness and is interested in finding out the ways the company could expand in those areas. So Mina's job is to help the company find innovative products as well. So, very well experienced director. You can use her name for consultation while writing about any development or retailing related topics. She's always looking at product development, which can be a good sign for our business. Also, she is well educated about sleep science, so she knows the science of it as well. Very good for the business. Third, we speak about production director Gavin Thorpe. So Gavin has worked for Amazing Beds for 6 months. He's newly come in. He previously worked as a senior production manager for Z Sleep, the leading manufacturer of branded mattresses in Eastland. So he worked for a competitor who is a leader, has a good brand image. He's responsible for all aspects of production facility. Gavin is interested in product design as well as production and is keen to expand the range of mattresses and beds made at the manufacturing facility. So, manufacturing is what he wants to increase. He wants to increase the profit that we earn from the manufacturing of products because only 33% of our gross profit is coming from products which we make. So, let's increase that so we have more control. So Gavin has experience working for a leading competitor. That can give us an advantage because he knows what the competitor does, how they do it, and it can help with better production management and scheduling. Competitive advantage again for my business because Gavin is working for me. Next, we speak about purchasing director Mo Singh. Now, Mo has worked for Amazing Bed again for 15 years in the purchasing department. She is responsible for all aspects of purchasing, both raw materials for the manufacturing facility and brought in products. So, what you buy as raw material to manufacture the mattresses in house, as well as the ready products you buy to sell in your stores, are handled by her. It's good because she has 15 years of experience. So Mo has, over the years, built up excellent relationships with many other companies' suppliers. So this is arguably one of the most important jobs for my business because the relation you maintain with suppliers decides the quality, the availability of the products that you have available to sell in your retail stores. She has good experience. Again, that's a plus point. Keep this in mind, everyone. Next, we speak about our marketing director, Hugo. So Helena has worked for Amazing Beds for 5 years, having previously been employed as a accountant executive in Eastland's largest marketing agency. She has huge marketing knowledge. She is responsible for all of the company's marketing and works closely with Meena Patrick on the branding of the business. So, brand importance is something which is important for my business. Maintaining the brand, furthering the brand, and leveraging the brand to sell more products is important. So, branding is an important aspect for Amazing Beds. So Helena was instrumental in successfully relaunching the company's brand 4 years ago. So she has worked as a marketing executive in one of the biggest companies in Eastland in the past. Her market knowledge and expertise can be a big competitive advantage for us. So relaunching the brand 4 years ago was only possible because of her experience. Branding is being given importance, which is definitely a good thing for a business that is a market leader. Leveraging the brand to make sure customers are returning for purchases is key for my business. So her job is also key. Then there is logistics director Jack Norton. Jack has worked for Amazing Beds for 25 years, starting as a logistics coordinator. He is responsible for the delivery fleet and all logistics operations. Again, excellent experience. Jack was the main driver behind the company deciding to gradually replace its delivery fleet with hybrid vehicles. Initiative is 35% complete. So he's a very well experienced director who has worked his way from the bottom of the company's hierarchy. So this shows that he will have solid knowledge about the entire system and hence he can make better decisions. A major point mentioned here is that he is the driving and gradual force behind the replacement of conventional trucks to hybrid trucks, which is electric trucks. This is also a good initiative and a competitive advantage for our business because you are becoming more environmentally friendly, carbon neutral, but it means huge capital investment. These trucks are not going to come cheap, right? So it's huge investment. Again, money aspect needs to be taken into account. Next director we are speaking about is Stephen Tang. He is the finance director, under which you will most probably be working. This is the person that you will be liaison with because he leads the finance team, right? He's the finance director. You work in the finance department, which they've clearly told you. So Stephen has worked for Amazing Bads for 10 years and has been finance director for the last 2 years. He's a qualified accountant as well. Stephen is responsible for all aspects of finance, including internal and external reporting. He's also having a lot of experience in IT and he's supported by external consultants. He's responsible for IT systems as well. So Stephen is well educated and qualified to carry out this role. He has been given the roles of finance and IT both. Finance itself is ever changing because of the digital transformation of the business, which Ben supports. He has been given responsibility for IT as well. A fully functional website with continuous improvement on the same requires a lot of time and attention. This appears to be too many jobs given to one person, and hence, at some stage, productivity is bound to fall. It is perhaps time to branch these out as a separate department and hire specialists for IT to sustain our growth and to stay away from any admin difficulties. You can keep this in mind. Same way, we have an HR director, which is run by Carl Baptist. So, Carl has worked for Amazing Beds for 7 years, but has worked in various HR roles for the last 30 years. Carl has a keen interest in employee welfare and has started a number of initiatives that he wants to improve upon. So, again, very well experienced, educated director with 30 years of experience in employment law. So he started key initiatives that will boost employee morale and generate competitive advantage for the company because happy employees is a happy and successful company. So our directors overall, if I want to put it, are very well experienced, are very well, indicted to run the company in a correct way for the future long term prospects of the business. So, with that, we have come to the end of our pre scene analysis part one. So, that's part one of our pre scene analysis. Thank you so much for attending it. Thank you so much for being here. For more details, you can visit the website down below. We'll put it in the description box as well. So, we are most happy to help you with your operational case study exam. Every single thing that you need for your exam will come from us. We are CIMA registered tuition providers. So everything that we do is in a very systematic, pre-planned, and it has always worked for the students that have been signing up for their case study exams with us. The entire pre-scene analysis is about 2 hours long and it includes the full financial analysis and the detailed explanations like we have done so far. Everything about your exam will come from us. After the pre-scene analysis, we begin with our detailed mock writing. We also do live classes for students that opt for our full case study pack. You receive twice a week live lessons where there will be live discussions in class where we will go through mock answers together, how to write an answer. Each and everything about the case study exam will be taught to you by us. All you need to do is follow us. If you have any questions, please do reach us as well. Thank you so much for attending. I wish you the very best.